The Australian property market has just clocked its fastest monthly gain in over a year. Home values have jumped nationally by 1.1% in October. That's the strongest since mid-2023. And over the past 12 months, we're up 6.1% nationally. So yes, momentum is back, but this isn't a boom, it's a tightening market being pushed by scarcity. Now, this is the totality report, which we can go through line by line, but I'm going to save you that and try and do it in less than 60 seconds. Across the capital cities, Brisbane, Perth, Darwin are leading, all up by 10 to 15% annually. Sydney and Melbourne are slower but still growing. Listings are about 18% below average, so supply is choked. That's a really good thing for prices to be going up. It's tough if you're out there trying to buy property, and a lot of our people with pre-approvals and the buyer purchases out there are saying the same thing, that it's just not a lot of stock out there. Now, sales are above average, buyers are getting out there, so there's a lot of demand, low supply. These are conditions for property prices to increase. What we're seeing here as well is the new policy support. So in October, from the 1st of October, there was the 5% deposit guarantee expansion that has unlocked more first home buyers and next home buyers. So there is a lot more competition there, but there's a catch. Even though rates have dropped, affordability is tightening again. Rising prices are eating into the extra borrowing capacity that people gained from those cuts. So if you're waiting for things to get easier, they're not, unfortunately. Really, if you're waiting for the market to shift, for it to go down, and maybe potentially waiting for more rate cuts, I don't see them anytime soon. So I would, if you're looking to get into property, get in sooner rather than later. Now, something to mention here as well is rents. Now, rents are also rising again. They're up about 0.5% on the month recently, which is strong, but yields are slipping. So they're down about 3.4%, lowest since 2022. That means investors are really chasing capital growth, not the yield. So what's the play now? Going through all of this data. This is a structural growth phase. It's not a speculative one. Low supply, policy tailwinds, and stable unemployment are supporting values, but credit conditions and affordability are going to separate the winners from the rest. For all of you, or healthcare professionals, anyone with solid income, this is where structure and timing matter most. Making sure that you get your pre-approvals in place, and then when you find a property that you like, you make sure you get in, bid hard, or make your offer pre-auction. There's a lot of value in working with buyers agents, making sure that you've got the right professional services around you and you're getting great advice. So if you're sitting on the fence, getting splinters in the bum, feel free to reach out to the team and we can help you with your borrowing capacity or get your pre-approval in place.